The broad market is trying to break lower out of a multi-week range. It has not finished the job just yet, so we'll keep an eye. Let's look at stocks that are reporting earnings on Wednesday, November 19th. These are going to be all S&P 500 components, and we're going to start with NVIDIA. All right, I've now updated my NVIDIA chart to still have the forecast that's technically intact while we're above the October 22nd low, but unlikely to be reached based on the current action, right? It's kind of a big jump away. But that's the thing about earnings. They can sometimes fuel big jumps. And remember, those of you who dive into my techniques on forecasting in the loss forecasting trading system, I show you how forecasts, even if they're not hit on the nose, can be helpful and help you make profitable trades. So I'm just keeping that there as a reminder, but what I'm really focused on is the more recent short-term decline, right? So we've been coming off of the high from October 29th, but the RSI Power Zones refuse to get deeply oversold. They keep holding in the bull support power zone. So I still think there's room for NVIDIA to trade higher. Of course, the earnings report and the commentary will likely fuel not just after hours, but the price action into Thursday. So we'll keep an eye. Now, I talked about Lowe recently, and they have seen shares come back to this rising trend line. Look how precisely we're on this level here today. And of course, we're midday, so the session hasn't ended, but it's providing beautiful support. So long-term trend lines can be really useful guides because remember, they're essentially tilted support or resistance. So always be looking out where you can use them. All right, target, ticker TGT. This has been in a downtrend for some time, most recently turning lower from the October 28th high, but the whole downtrend is intact from the July 23rd high. Now, when you look at a chart like this, if you just pull it up as I did, daily chart, some default amount of data, you might think, oh, we're trading at lows and this might be an area to buy. That's where it's important to always look at time frame per perspective. So if we now jump out to say a monthly chart, suddenly see, oh, we are not at the lowest areas this has traded in a while. I mean, 5 years ago, it was at these areas, right? So now you can come in and find monthly support. The August 2019 monthly low at 80.03 is a next downside target. Then you have these other monthly lows as well. So if we keep seeing target weaken, then you can take those monthly levels, jump back to your jelly chart, and now you can take those actual previous traded levels and then combine them with other tools. So for example, if we keep weakening on the RSI, do we get back to bear support? Do we see Gann candlestick patterns? Do we see multi-bar Gann trading patterns? Do we see forecasts, right? Whatever it is that's in your toolkit, whether it's my techniques or not, looking at the past price action on a stock that's doing a long-term retracement of a past advance or decline is really helpful. Now, TJX, this is a stock where you can look at it and think, oh, it's like at all-time new highs. Again, you need some perspective, so go to the monthly chart and that will give you the answer. And in this case, it is based on looking back, 20 years. Now, when we look back at the daily chart, we can see we're in an uptrend, and you always want to know what's supporting the current trend, if you can define one. And usually that's the most recent swing low. So I get into swing lows, price lows, and bar lows in my winning price action playbook and my missing trends ebook. And we have a doji low that held on November 3rd. And while we stay above that, there's room to move higher. Last but not least is PANW. Now, this is a stock that's been retracing. And again, if you just look at what flashes up on your screen, you won't have perspective on where the trend has been. If you go to a higher time frame, it will confirm or deny whether you're trading at extreme levels or simply up against some old resistance. In this case here, we are pulling back after trading up to extreme levels on October 28th. We're correcting lower. And what I see here is the potential to draw a trend line connecting the most recent lows to see if that may provide future support. We're not near it yet, but in case we do get close to it. Alongside that, I would like to look at how much of the most recent advance we have given back the gains, right? So you can see 50% is up at 194.41, and we're not quite there yet. So right now there is scope for this stock to weaken towards that 195 area and then perhaps provide a tradable opportunity. If it starts resuming higher before getting into the 50% retracement, that's even better. That implies it's a stronger market and stronger trend, especially if it can form a trough really close to that bull support power zone. All right, so that's my take on S&P 500 stock components reporting earnings on Wednesday, November 19th. NVIDIA being the big one to watch since it has the most weight on the S&P 500 at this time. If you found value in this video, useful technical analysis techniques, recommendations of stock to keep on your watch list or more, go ahead and hit that like button and I'll catch you in the next video.